On Wednesday, Opendoor stock closed at $8.54, down 76 cents, or about 8.76% on the day. It was a sharp move lower, especially coming off a strong Monday rally and a balanced Tuesday session that had many investors feeling that momentum was beginning to rebuild. But as we've seen before with Opendoor, this is a stock that moves fast in both directions. What matters more than any single session is the trend that's forming underneath, and tonight, that story still looks far more bullish than bearish. For much of Wednesday's session, Opendoor actually traded fairly close to Tuesday's closing prices. It wasn't until later in the day that the sell-off began to accelerate. There wasn't any obvious news to drive it, no downgrade, no major analyst note, and no macro headline that clearly tied into the drop. What did happen, however, was an interesting little moment on X, the social platform where so much of the Opendoor retail community now lives. A thread began to circulate where one user, OpenRaw, posted that Open would double within 30 days. A few hours later, another user under the handle Cryptomaxi fired back, saying Opendoor had just offered him $150,000 below market value for his home and called the company's model broken. Within minutes, Kaz Nejatian, Opendoor's CEO, stepped into the thread and said simply, "DM me your address." It's a small exchange, but it says a lot about what's changing inside this company. A CEO responding directly to criticism in real time is rare. It shows accountability and confidence, not avoidance. Kaz didn't hide behind PR filters or canned statements. He was willing to engage, to learn, and to prove that Opendoor is not afraid to stand by its model, a model that's now being rebuilt from the inside out through AI-driven tools, a leaner operating structure, and a sharper focus on customer trust. If you zoom out for a moment, Wednesday's drop feels less like a rejection and more like a pause. The stock had rallied hard on Monday, consolidated on Tuesday, and by Wednesday, short-term traders were likely locking in profits. But beneath that, the broader story is gaining structure. Over the past few weeks, Kaz has been steadily revealing pieces of the new Opendoor playbook. He's hired Morgan Brown as Chief Growth Officer, an executive known for scaling fast-growing consumer brands with a data-driven mindset. He's made an open call for designers and engineers to help build what he calls the next generation of AI-first buyer and seller products. And he's been talking publicly with leaders like Vlad Tenev from Robinhood about how crypto and real estate tokenization could one day merge, creating an entirely new way for people to buy and sell homes. When you combine those threads, you begin to see a bigger picture forming. Opendoor isn't just trying to fix a business model, it's trying to reinvent how housing transactions happen altogether. The company's mission has always been to make buying and selling a home as easy as clicking a button. But with the convergence of AI, automation, and potentially blockchain, that idea is no longer just marketing talk, it's technologically achievable. Imagine a world where property ownership, pricing, and closing processes are all verified and executed digitally in minutes instead of months. That's the world Kaz Nejatian is pointing toward, and it's exactly the kind of long-term vision that can re-energize both institutional and retail investors alike. And make no mistake, institutional money is already taking notice. Jane Street, one of the most sophisticated trading firms in the world, recently disclosed a roughly 5.9% stake in Opendoor, equating to about 44 million shares. That's not small retail money, that's deep, analytical capital that sees opportunity. These kinds of players don't take large positions in companies they think are structurally broken. They take positions in companies undergoing a strategic reset that could produce massive upside once the pieces start to click. That reset began when Kaz took the helm. Coming from Shopify, he brought with him a builder's mindset, an operator who understands how to scale products, not just run an organization. At the same time, Opendoor's founders, Keith Rabois and Eric Wu, returned to the board, with Rabois stepping in as chairman and co-investing alongside Khosla Ventures in a $40 million pipe deal. That kind of alignment between new leadership, returning founders, and investors speaks volumes. It signals belief. It signals ownership. And it shows that the people who know the business best are still willing to put real capital behind it. Of course, when a new leadership team takes over, there's always turbulence. The Rabois comment that Opendoor could function with a fraction of its current headcount made headlines, and understandably, that kind of bluntness rattles nerves. But the truth is, every transformation starts with hard truths. Opendoor grew quickly during the boom years, and the housing slowdown exposed inefficiencies that needed to be fixed. If a leaner, smarter Opendoor emerges from this transition, it's actually bullish for long-term profitability. In an industry that's notoriously high cost and low margin, being able to automate, simplify, and compress the workflow could turn today's pain into tomorrow's moat. Now, about that Wednesday drop, it's easy to look at a nearly 9% slide and assume sentiment has turned. But the data doesn't really show a breakdown in conviction. Trading volume was moderate, and the dip happened relatively late in the day. That's more consistent with algorithmic selling and short-term noise than with broad investor panic. In fact, the after-hour session showed modest stabilization, and several forums were already framing the move as a buy-the-dip setup heading into Thursday. For retail traders, those pullbacks are often where the biggest runs begin. And this is where Opendoor becomes such a fascinating story. It sits right at the intersection of institutional validation and retail enthusiasm. You have a serious balance sheet business with over $4 billion in cash and inventory flexibility, but you also have a narrative that energizes everyday investors. The idea that technology can finally fix one of the most broken, frustrating systems in everyday life, the housing market. People care deeply about homes. They care about fairness, transparency, and opportunity. When a company positions itself to deliver that through innovation, it creates emotional resonance. That's why Opendoor's story keeps pulling people back in, even after tough sessions. Kaz understands this better than most. His public presence over the past few weeks has been deliberate. He's not only speaking to investors but also to homeowners, to designers, to engineers, and to potential partners. His conversations with people like Vlad Tenev are not random. They're exploratory, forward-looking, and they help signal that Opendoor's future might extend beyond the traditional housing transaction. Imagine tokenized property fractions that could allow partial ownership, instant liquidity, and a bridge between real estate and digital assets. Imagine AI systems that dynamically price homes based on hyperlocal data, market psychology, and live-comparable sales. These are not sci-fi concepts anymore, they're the logical evolution of where housing meets fintech. As an investor or trader, the key is to recognize that narratives like this don't move in straight lines. There will be sharp dips and dramatic rallies, but the underlying story is what determines the trend. On a day like Wednesday, when the stock falls sharply without any real news, it's usually not the end of a run, it's the market catching its breath. Remember, we've seen this same setup multiple times in 2025. Every time the stock consolidates after a rally, the next leg higher tends to come once new information, or even just renewed sentiment, enters the conversation. That could come in many forms. It might be another high-profile hire, a partnership announcement, or a detailed preview of what the new AI-driven buyer and seller tools will look like. It might even be an early glimpse of how tokenization could fit into the platform. Whatever it is, those kinds of moments are catalysts, and the people closest to the company clearly see more of them coming. The culture shift underway at Opendoor isn't about survival, it's about expansion. And when a company is expanding its vision at the same time the broader market is still catching up, that's where opportunity lives. For the traders watching the chart, the technicals remain intact. The 850 zone is now an interesting level to watch. If it holds, that could become a new short-term base, a place where accumulation happens before the next push higher. A rebound back through the $9 level would suggest that buyers are already stepping back in. Momentum indicators are still within normal ranges, and the volume profile suggests no capitulation. In other words, this doesn't look like a breakdown, it looks like a reset. Psychologically, dips like this are often where conviction is tested. The impatient traders get shaken out, while the long-view investors quietly add. And that's often when new upside begins to build. If you believe in the longer-term vision, the AI transformation, the leadership alignment, the institutional participation, and the potential integration of crypto infrastructure, then an $8 handle can look like an opportunity, not a threat. Looking ahead to Thursday and Friday, keep an eye on volume and sentiment across social channels. If we see renewed energy around Kaz's leadership posts or fresh engagement around Opendoor's AI initiatives, that could act as a near-term spark. The market loves a story, and Opendoor's story right now is that of a comeback, a turnaround that's starting to gain credibility. From the outside, it might look volatile, but internally, the pieces are lining up: new leadership, new direction, new capital, and new technology. So yes, Wednesday was a red day on the screen, but the narrative is still painted in green. This is a company in transition, and transition periods are rarely smooth. What matters is that the transformation is anchored by vision and capital, and both are now in place. With Jane Street on the register, with Kaz building a world-class team, and with a community of believers ready to defend their thesis, Opendoor remains one of the most compelling risk-reward setups in the housing tech space. As we move into Thursday's session, The key thing to watch is whether buyers step back in near that 850 level. If the price stabilizes and volume starts to climb, it could be an early sign of accumulation. That's often how short squeezes and bullish reversals begin. And remember, this stock still carries a high short interest. Any positive catalyst, even a minor one, could set off a fresh wave of covering. In short, what we saw today wasn't panic, it was positioning. The next phase of Opendoor's story is unfolding in real time, and it's bigger than just a daily chart. It's about how technology, leadership, and vision can intersect to reshape a trillion-dollar industry. Kaz Nejatian is laying that foundation step by step, and the market is still trying to catch up to what that means. So stay focused, stay informed, and keep the long game in mind. Because if this reset marks the end of a shakeout rather than the start of a slide, Wednesday's dip may one day be remembered as the point where the next rally began. Opendoor has been written off before, but it's still here, leaner, smarter, and more determined than ever to prove that the future of housing can, in fact, be built by code. And for those watching the story unfold with patience and conviction, that's where the real upside lies.